Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is our good friend Peter St Onge. He is an economist, former MBA professor, and a daily contributor to the Wall Street Silver YouTube channel. How are you, Peter?
I am great. It's great to be back.
Yeah, it's always a huge pleasure having you on Wall Street Silver, and your episodes daily are incredible. So thank you for the contribution.
Thank you. I've just been thrilled. You know, there are so many people who are awake, not woke, but awake at
Yeah,
this
don't say
point.
woke.
No, there's a big distinction between being awake and seeing what's going on in this woke crap. So,
Yeah,
yeah.
absolutely. So Peter, getting to the economy and all the crisis calls from the White House, the legacy media, and even Janet Yellen herself was saying there's an economic catastrophe coming due to the debt ceiling dilemma. But now that debt ceiling deal is made, how bad was that deal, and what do you see the effects from that deal happening?
Yeah, I mean, it was a horrible deal. You know, they had a fear campaign running. That's why Janet Yellen was on about that. Nobody on either side of that deal wanted to default. That was never, ever on the table, right? The issue here that they were trying to hide is that the question was always deficits, right? So there is plenty of tax money coming into the US government, and they were trying to represent it as if, you know, if the debt ceiling hit, the US government would like have no more money,
Right.
right? Like, you know, everybody be starving in the street. And the truth of the matter is that if the debt ceiling had just hit, then they would have had to reduce spending by about 20%. All right. So the budget is something like it's a little bit north of 6 trillion,
Right.
the annual federal budget, and they would have had to cut that down to about 4.8. Now, if we had a government who was actually interested in taking care of the country, then obviously they would have gone through and cut the waste, all the crap that we don't need, right? Most of the budget is crap that we do not need. It's
Hmm.
not stuff that's actually popular. You know, it was vote buying or it's crony paying or something like that. So they could have gone through, found 1.4 trillion in savings. Not only, you know, we would have balanced the budget, we would have returned to the golden days when the government, you know, was actually spending within its means. More important than that, that would have ended this inflation in its tracks. I mean,
Hmm.
the reason why we've had almost 10% inflation for the past over a year now is because of all of those federal deficits, all of that flood of money that comes in. And then the only way that the Fed has to fight that is to hike interest rates so high that it kills the private economy, essentially clearing everybody off the highway so the feds can keep spending as fast as they want.
Yeah, and everyone has been saying this for a while, Peter, that the Fed has basically trapped themselves, and it's a trap of their own making. How bad is Jerome Powell's dilemma right now? Like, how bad is it?
Objectively, it's very, very easy. He just needs to, you know, start playing tougher with Congress, with the
Right.
federal government. So stop buying their debt, sell off all of the federal debt that the Fed has accumulated. So, you know, if again he was actually trying to solve the problem, it would be extremely easy. You sell off that debt, you start reining in inflation, you start sucking money back out. You know, all this
Right.
money that they've printed over the past couple of years. Now, of course, Jerome Powell is not willing to do that. Right? That's what makes his job difficult. Is that he is spineless. You know, so he was asked during a congressional hearing a couple months ago. One of the senators asked him, "Well, you know, has federal spending been part of the inflation problem?" And I mean, he was real uncomfortable. It was like you had just insulted his wife. He was like, "Well, we don't really get involved in those things," because you were asking him to attack his boss. You know,
Right.
he knows darn well that the Federal Reserve only exists because Congress lets it exist. If they don't follow, you know, the desires of Congress, then they're going to start seeing bills that will rein them in, that will actually put them under control of Congress, meaning control of the people.
Absolutely. And Peter, the corporate legacy media lately, they've been attacking de-dollarization and acting as if like nothing can ever change. What concerns you right now with these woke sanctions?
Yeah, that just came out today. So the big story in de-dollarization has been going on for a long time, right? So the US dollar used to be, you know, sort of the rock of the world economy, and it's been losing that status for a long time because of the fiscal irresponsibility of the U.S. government. But then that really took off once Russia invaded Ukraine, because Biden came in and seized Russia's sovereign dollars, right? These were dollars that belonged to the central bank of Russia. The understanding under the sort of dollar standard had been that sovereign dollars owned by other countries, even countries that we were at quasi-war with, like the Soviet Union, those were off limits. And the reason you do that is that you even want your enemy to be dependent on you. Right. And Biden broke that. He threw it away. Right. So they seized the dollars of the Russian central bank. It was about 300 billion. But if you control for the size of the Russian economy, that was equivalent to about 4 trillion in US terms.
Wow.
Right. And what they were trying to do was to crash the entire Russian banking system. So that failed. But what it did do is every other country in the world who can imagine itself going crosswise with the US took a look at that and said, whoa, the risk is too high here. We can't park, the foundations of our banking system in some asset that is just going to be pulled away. Right. And so what, sort of the hope that countries had was that this was kind of an extreme case, right? So we were just talking about Russia invading Ukraine. This is not something that happens every Tuesday. The problem now is that the Biden administration is starting to ramp up pressure on different countries over LGBT policy, right? So just today they announced that they're going to start looking at sanctions against Uganda, which has a new anti-gay law. Africa in general is extremely socially conservative. So, what happens in Uganda is going to be true in Nigeria. It's going to be true in the Middle East. It's going to be true really in about 95% of the world. The administration has also been, it's been a big topic in Japan right now. They have an LGBT law that's being debated very passionately there. And the administration has been using surrogates, putting a lot of pressure to try to put a finger on the scale. And again, it was long understood that Japan is dependent on the U.S. for its military. It has this, nuclear umbrella over it. And it was long understood that the U.S. would not abuse that by getting involved in domestic politics. It is very much doing that now. So you put those together with the fact that the U.S. has been irresponsible, for decades, but that's now ramping up. We can see that from this debt deal. And you put those together, and a lot of countries now are starting to say that the U.S. is no longer the safe haven of the world economy. This is now a risky asset. This is something that could be rug pulled anytime, whether it's foreign policy, whether there's some domestic policy we have that the US doesn't like, that is chasing countries off the dollar now. And the problem is that China is very, very happy to take advantage of that.
Oh, yeah,
right. That is a dream come true for China. China is much more patient and smart in how it conducts these things. If you contrast them to the Biden administration, it's just embarrassing. So China is doing what it can to take advantage of that situation. What they want to do is to dethrone the US dollar, because they know that if that happens, not only does US power decline, you would get this massive flood of inflation running back into the US. Right, you would have this overhang of trillions upon trillions of US dollars that are now happily parked overseas. Those would come flooding back into the US. That would take the US out of the game. Right, at that point, China has a free hand. And of course, because the US has issued these security guarantees to Europe and Korea and Japan, all of those countries are atrophied. They do not have the kind of military that they should, given what kind of neighborhood they live in, right? They've got Russia, they've got China, they've got all kinds of aggressive countries around them, North Korea shooting missiles. They don't have the militaries to deal with those things because for so long, the US has said, don't worry about it, guys. We'll take care of it. We will sacrifice our blood and treasure. The problem is that if you do that for a long time and then all of a sudden you stop, you massively destabilize the world. You create an enormous vacuum, which China is going to be very, very happy to step into.
And you see China, what kind of their tactic I've kind of seen is they'll give a country a crazy amount of loan in Africa, a bunch of African countries, but what they'll do is they'll do a 99-year lease on their port, and if they can't pay that debt or they can't pay that loan when they call it in, they get a port of that. So their whole tactic is really economic to dethrone the US at this point. So
That's
it's
exactly right. And just I mean, again, the contrast is really embarrassing how the US and how China do these things, right? So the US comes in, it pours a crap load of money in there. It lends it to companies or countries that it knows are never going to be able to repay it. It's unsecuritized. And so when they go bust, they then get US taxpayers to bail it out. We had a whole series of crises, the tequila crisis and the vodka crisis. It's like the media was playing a game trying to make it into something fun, where US taxpayers over and over were bailing out these crap loans that were not collateralized with the kinds of things that China demands for its loans, which are things like ports and mines and railroads. So those will be paid back. And so China is effectively not only is it stepping into the shoes that the US used to fill in a lot of these countries, it is doing it in a much, much smarter way that actually gives it leverage over these countries, rather than what the US does, which is gives every banana republic in the world leverage over the US taxpayer.
And you see the BRICS nations, everyone from Brazil, Russia, India, China, and a few others. They're looking to move away from the US dollar and, of course, de-dollarize. But can they end the dollar's dominance fully, or is it just too far-fetched to completely do it? Is it even possible for them to get that done?
It is possible. So we have sort of two ways it can be done. We have the conventional way, and then we have the nuclear solution, which involves gold. The conventional way would be, basically what China's doing now. So you bribe countries into your block one by one. China's doing that with development loans, access to, you've got the shared BRICS bank, which is really just kind of like a vote buying mechanism for China to bring countries in. Once you bring countries in, you want to give them enough benefits that you can punish them for leaving. Okay, right. So you kind of close the trap on them once they're in, and then you start making demands. And you force them out of the dollar. So that's kind of the conventional means. That would take a long time, maybe a decade, maybe more, depending on how irresponsible the US is if it keeps doing sanctions on random countries. And then, of course, you have the nuclear solution. The nuclear solution is that you back the darn thing with gold. It could be gold, it could be silver. It would have to be something that is based on a physical commodity, which stands as a guarantee that not only are they at that point providing a depoliticized dollar that's not going to get seized, but they would actually be providing a currency that has superior inflation dynamics to the US dollar. At that point, a gold or silver-backed BRICS currency would wipe the floor with the US dollar, right? Switzerland used to have partial gold backing, and the biggest problem they dealt with was that their currency was so strong. Now, that's a problem if you're tiny Switzerland, because politically, the milk and the watch exporters, they have political pull. So Switzerland ended up devaluing, but that's because Switzerland is so small, right? The moral of the story is that even with a tiny little currency like the Swiss franc, which compared to the dollar is a tiny currency, even back then, you can take significant market share from the US dollar if you've got commodity backing. And that was partial commodity backing, right? So if BRICS goes that route, I suspect they're going to start with the conventional because it's easier and it's cheaper. If they fail, then, they've already discussed some sort of physical backing to their currency. It could be something like oil, which that doesn't work as well because you've got supply dynamics. But anyway, if they do back their currency with commodity, then absolutely it could start to take significant share from the US dollar.
And there's one person that comes to mind when you were talking about the nuclear option of going to gold, and that's Muammar Gaddafi. He wanted to go to a dinar, a gold dinar, everyone in Africa, to his all the African nations where you don't buy oil, you don't buy anything with the US petrodollar anymore. You buy it with the gold dinar, and Libya had a lot of it compared to its population compared to the rest of the world. So you said that would wipe the floor with the US dollar. What happens when China and US do that? Like, you can't just go into Libya and take out, you know what I mean? Libya was easier for the US, but
exactly.
What happens when China and Russia do it? Is that just straight nuclear, like actual nuclear war?
Yeah, I mean, that's how, genuine nukes work, right? You have an immunity at that point. Anybody who has a nuclear weapon, the US cannot touch. And so in practice, the only country that could do it realistically would be either Russia or China.
Wow. And moving on a little bit to a different topic, Peter, is job numbers have been a big topic lately. They keep coming up in high numbers, but I'm seeing reports all across major companies of massive layoffs all year. How distorted are the job numbers from the government?
Yeah, that's one of the big questions right now is that, 4 years ago, before COVID, the standard response to somebody who said that the government numbers are cooked would be, take off the tinfoil hat. And I think a lot of us, not only because of the behavior during COVID, but we're sort of a lot more open-minded about such possibilities at this point about
Right.
faking data. And when you look at the actual data that the Bureau of Labor Statistics, that's the main outfit in the U.S. who reports jobs numbers, they are really looking extraordinarily fishy, right? You've got, for example, on one series, they've had 14 beats in a row. Okay, that's beats on their own predictions. Now, if you're a statistics outfit, you should be beating 50% of the time. It should be like flipping a coin,
Right.
because you're presumably trying to aim at the truth. And so sometimes it's a little bit high, sometimes it's a little bit low. So to get 14 times in a row, I worked out the numbers. There it is. It's 1 in 16,000. So it is certainly possible that they have managed to win the lottery in the crappy statistics tournament. But, of course, given that a friendly interpretation of the jobs data is very helpful to the Biden administration. The Biden administration, of course, pays their salaries. One might doubt. You've had other situations where the alleged jobs numbers keep coming in and just, soaring past Wall Street numbers, like double, triple Wall Street estimates. And again, Wall Street is paid very good money to try to estimate these numbers. They have access to, in some cases, they have better data than the government because they have more money to go out and seek interesting data sets. And, again, they just keep getting egg on their face because either they're very, very bad at estimating numbers, or the numbers themselves are not trying to tell the truth.
Yeah.
So, and this sums up to an enormous number. Like, for example, we've got one series, the household versus establishment, where there's about a 2 million job difference between these two estimates. And so the problem there is that the Fed is using these numbers as if they're true. Okay. The numbers come out, the Fed makes decisions based on what the numbers say.
Right.
And then several months later, government comes back and revises these things massively. Well, the problem is that the Fed is making decisions based on what the government claimed in the first place. So, for example, the Fed is ramping up rates so aggressively. It's actually the most aggressive rate hike since the 1970s. So they're ramping it up so aggressively because, yes, they see the economy is slowing everywhere except for the jobs. And they say, well, there's more slack. We can, crush jobs and crush companies because there's jobs to spare, is what they're thinking. But the problem is that if those are mirages, if those jobs aren't actually there, then the Fed is cutting into bone.
Yeah, that's actually terrifying to think about. They don't even have the right numbers and they're literally trying to fix the economy, and they have diluted mirage numbers.
It's like being a doctor on like telemedicine, and you don't realize that you're like 6 inches to the left or something. I mean, stop what you're doing. Don't try harder. Stop.
Yeah, just stop. Well, Peter, it's been a huge pleasure for you to come down to Wall Street Silver and do these lengthy questions. It's been a huge pleasure, and then hopefully we can have you back on in the future to do another lengthy interview like this.
Yep, I'd love to anytime.
Awesome. Talk to you soon.